In this video, I'll talk about a simple day trading strategy using the Ichimoku Oscillator with Divergence. If you found the Ichimoku indicator confusing in the past, you might prefer the Ichimoku Oscillator with Divergence, which works similarly but is easier to understand. Remember to show your support for this channel by liking and subscribing. I'll show you an example of using this strategy for daily trading, but it's also applicable for scalping. Plus, you can use it for various assets like Forex, crypto, stocks, and futures. To use this trading strategy, you can access the TradingView platform and go to the Indicator Search tab. In the Search Indicator tab, type Ichimoku Oscillator with Divergence and select the one from Chart Prime. Now, navigate to the Settings tab. When you enter the Settings tab, you will find numerical values similar to those in the typical Ichimoku Kinku indicator. However, there are some differences in the settings that you can adjust when using the Ichimoku Oscillator with Divergence indicator. One of them is Divergence. You can activate the Divergence option based on your preference, whether you want to use regular divergence or hidden divergence. Next, under the visibility options, you can choose to show or hide signals, Chiku span conversion and baselines moving averages, and the Kumo cloud. However, for this example, as I will demonstrate a typical day trading strategy, we will deactivate the options for regular bullish divergence and regular bearish divergence. Additionally, for the other settings, I will stick to the default configurations. Click OK to confirm the changes. Similar to oscillators in general, the Ichimoku Oscillator also has crucial areas such as oversold and overbought. When the signal line enters the overbought area, it usually indicates that the price might undergo a downward correction. Conversely, if the signal line enters the oversold area, it typically suggests that the price might experience an upward correction. If the signal line is red, it indicates a bearish trend, while if the signal line is green, it signals a bullish trend. The color silhouette on the middle level line is the Kumo, which can also be interpreted as support or resistance. If the silhouette is green, it can be interpreted as support, while if the silhouette is red, it represents resistance. On the other hand, if the signal line is yellow, it signifies a neutral signal. This can indicate a potential trend change. For example, during a bullish trend, if the trend line color changes from green to yellow, it may signal a trend reversal or just a correction. In general, the yellow signal line is formed when the signal line approaches the Kumo silhouette. Now, re-enter another indicator that will serve as a trend guide in the market. Go back to the Indicator Search tab and type Smooth Heiken Ashi Candles. Then, select Smooth Heiken Ashi Candles from Jack. Now, go to the Settings tab for Smooth Heiken Ashi Candles. In the Input tab, leave the settings at their default values. Then, go to the Style tab. In this tab, adjust the opacity of the wick according to your preference and click OK. Smooth Heiken Ashi Candles will be used as a trend guide in the market. When the color of Smooth Heiken Ashi changes from red to green, it indicates a trend change from bearish to bullish, and your main focus should be on finding the best buy entry points. Conversely, if the color of Smooth Heiken Ashi Candles changes from green to red, it signals a trend change from bullish to bearish, and your main focus should be on finding the best sell entry points. Placing a buy order. If the Smooth Heiken Ashi candle signal is green, your main focus is to find the best entry point for a buy order. Wait until the Ichimoku Oscillator with Divergence signal changes from red to yellow and then to green. Ensure that the formed candlestick is a bullish candlestick. If all conditions are met, you can place a buy order after the bullish candlestick has completed and closed. Place the stop loss at the most recent swing low. Use a target take profit with a risk and reward ratio of 1 to 1.5. Placing a sell order. If the Smooth Heiken Ashi candle signal is red, your main focus is to find the best entry point for a sell order. Wait until the Ichimoku Oscillator with Divergence signal changes from green to yellow and then to red. Ensure that the formed candlestick is a bearish candlestick. If all conditions are met, you can place a sell order after the bearish candlestick has completed and closed. Place the stop loss at the most recent swing high. Use a target take profit with a risk and reward ratio of 1 to 1.5. Don't forget to subscribe for more video like this. Thank you for watching.